ExamPrep.School. FLA Health Insurance Agent Exam. Exam code InsFL-Health02. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Field underwriting procedures. Other insurance concepts. Policy provisions, clauses, and riders. Social insurance. Statutes and rules common to all lines. Statutes and rules specific to health insurance. Types of policies. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under an own occupation disability definition, an insured qualifies as disabled when the insured is unable to A. Perform the material duties of their occupation or any other job requiring similar skills. B. Engage in any gainful occupation for which they are reasonably suited by education, training, or experience. C. Perform the material and substantial duties of their regular occupation, regardless of ability to work in another field. D. Earn at least 75% of their pre-disability earnings in any occupation. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is C. The correct answer is based on the own occupation definition, which considers an insured disabled if unable to perform the material and substantial duties of their own occupation, regardless of capacity to work elsewhere. Reason A is not correct. This option blends own occupation and any occupation language and is not the strict own occupation criterion. Reason B is not correct. This describes the any occupation definition, not own occupation. Reason D is not correct. This is an income-based requirement which is not part of the own occupation definition. Question 2. Which statement best defines the any occupation disability insurance criterion? A. Inability to earn at least half of pre-disability income from any gainful occupation. B. Inability to perform the material and substantial duties of the insured's regular occupation. C. Inability to engage in any occupation for which the insured is reasonably fitted by education, training, or experience. D. Inability to carry out any one duty of their own regular occupation. The correct answer is C. The correct answer reflects the any occupation definition, under which disability is based on inability to work in any occupation for which the insured is reasonably fitted by education, training, or experience. Reason A is not correct. This introduces an income threshold, which is not part of the any occupation definition. Reason B is not correct. This describes the own occupation definition rather than any occupation. Reason D is not correct. This refers to inability to perform a single duty, which is too narrow and not the correct criterion. Question 3. A 38-year-old policyholder loses both hands in an accident. Their individual disability income policy includes a presumptive disability provision, waiving the elimination period for the loss of use of 2 limbs. According to this provision, what outcome applies? A. The policyholder receives partial benefits after the elimination period. B. The policyholder receives full benefits immediately without serving an elimination period. C. A reduced benefit is paid for a fixed term due to dual limb loss. D. The standard elimination period applies before full benefits begin. The correct answer is B. The correct answer is that full benefits are paid immediately because the presumptive disability provision waives the elimination period when there is loss of use of both limbs. Reason A is not correct. This choice is incorrect because a presumptive disability provision waives the elimination period entirely rather than imposing it for partial benefits. Reason C is not correct. This choice is incorrect because dual limb loss under a presumptive disability triggers full, not reduced benefit payments. Reason D is not correct. This choice is incorrect because the elimination period is waived under the presumptive disability provision. Question 4. A self-employed graphic designer has 6 months of living expenses saved and seeks a disability income policy. When evaluating elimination period options, which consideration most directly influences the choice? A. The policy's cost of living adjustment rider availability. B. The adequacy of personal savings to cover expenses during the waiting period. C. The insured's occupation classification risk level. D. The policy's maximum benefit period. The correct answer is B. The correct answer is that elimination period should align with the insured's ability to self-fund living costs, making savings adequacy the most direct consideration. Reason A is not correct. This choice is incorrect because a cost of living adjustment rider affects benefit increases over time, not the waiting period. Reason C is not correct. This choice is incorrect because occupation classification impacts premium rates rather than elimination period selection. Reason D is not correct. This choice is incorrect because the benefit period determines duration of payments, not the waiting period before benefits start. Question 5. A 28-year-old engineer wants disability income protection until retirement. His insurer offers benefit periods of 2 years, 5 years to age 65, or to age 67. Under these choices, which provides the longest income protection period? A. A 2-year benefit period. B. A 5-year benefit period. C. A benefit period to age 65. D. A benefit period to age 67. The correct answer is D. The correct answer is the benefit period to age 67, which extends coverage longer than the other stated options. Reason A is not correct. This choice is incorrect because a 2-year period is much shorter than coverage to a specified retirement age. Reason B is not correct. This choice is incorrect because 5 years is still shorter than a benefit period extending to a retirement age. Reason C is not correct. This choice is incorrect because coverage to age 65 ends earlier than coverage to age 67. Question 6. A small law firm has a business overhead expense policy with a $12,000 monthly limit. In 1 month, eligible expenses include rent of $5,000, employee salaries of $4,500, utilities of $1,200, and equipment depreciation of $2,000. How much will the insurer pay under this policy for that month? A. $9,700. B. $12,000. C. $12,700. D. $10,700. The correct answer is D. The correct answer is $10,700 because depreciation is excluded. So only rent, salaries, and utilities totaling $10,700 are covered, which is below the $12,000 limit. Reason A is not correct. This choice is incorrect because it understates the total of eligible expenses by omitting part of the rent or salaries. Reason B is not correct. This choice is incorrect because the policy limit does not apply to excluded items, so depreciation is not covered. Reason C is not correct. This choice is incorrect because it sums all expenses including depreciation, which is excluded under a business overhead expense policy. Question 7. Which of the following best describes the comprehensive lifetime maximum in a major medical insurance policy? A. The total dollar limit the insurer will pay for covered expenses over the insured's lifetime. B. The maximum benefit payable for each separate illness or injury. C. The required aggregate deductible before the insurer begins paying benefits. D. The limit on benefits payable within a single policy year. The correct answer is A. The comprehensive lifetime maximum specifies the total dollar amount the insurer will pay for all covered expenses over the insured's entire lifetime. Reason B is not correct. This describes a per-condition maximum rather than the overall lifetime benefit cap. Reason C is not correct. This describes a deductible requirement instead of a limit on benefit payments. Reason D is not correct. This refers to an annual benefit limit, not a lifetime maximum. Question 8. In a health maintenance organization, what is the primary role of the gatekeeper primary care physician? A. To coordinate referrals to specialists and manage patient care. B. To determine premium rates based on risk assessments. C. To adjudicate claims and authorize benefit payments. D. To provide care exclusively within hospital inpatient settings. The correct answer is A. The gatekeeper primary care physician coordinates patient care, authorizes referrals to specialists, and manages treatment within the HMO network. Reason B is not correct. Setting premium rates is an administrative function performed by underwriters or actuaries, not physicians. Reason C is not correct. Claims adjudication is handled by administrative staff or insurers rather than by the physician. Reason D is not correct. Primary care physicians provide both outpatient and inpatient care, not exclusively hospital-based services. Question 9. Samantha has a PPO health plan that covers 80% of allowed charges for in-network services and 60% for out-of-network services after the deductible. If Samantha receives a covered in-network procedure with an allowed charge of $1,200 and an out-of-network procedure with an allowed charge of $1,200, what are her respective coinsurance payments? A. $200 for in-network and $400 for out-of-network. B. $240 for in-network and $360 for out-of-network. C. $300 for in-network and $500 for out-of-network. D. $240 for in-network and $480 for out-of-network. The correct answer is D. The policy requires Samantha to pay 20% coinsurance in-network. 20% of $1,200 equals $240, and 40% coinsurance out-of-network. 40% of $1,200 equals $480 after the deductible. Reason A is not correct. This miscalculates the coinsurance rates as 16.7% and 33.3% instead of the correct 20% and 40%. Reason B is not correct. This understates the out-of-network cost by using the in-network rate for both services. Reason C is not correct. This option applies incorrect percentage rates that do not match either in-network or out-of-network coinsurance. Question 10. Carlos has a point-of-service POS health plan that requires a primary care physician referral for in-network specialist visits, but allows direct access to out-of-network specialists at higher cost. When Carlos sees an out-of-network specialist without a referral, which plan feature is he utilizing? A. Open access provision. B. Self-referral option. C. Tiered network benefit. D. Exclusive provider requirement. The correct answer is B. Point-of-service plans include a self-referral option that permits members to see out-of-network specialists without a referral, but with higher cost sharing. Reason A is not correct. Open access applies to plans that waive referrals for in-network providers, not out-of-network specialists. Reason C is not correct. Tiered network benefits refer to different cost levels within a network, not referral flexibility. Reason D is not correct. Exclusive provider requirements restrict members to in-network providers, the opposite of this feature. Question 11. Olivia's high-deductible health plan, HDHP, provides self-only coverage with a $1,400 annual deductible. According to IRS regulations for tax-qualified HDHPs, does Olivia's plan meet the minimum deductible requirement? A. Yes, because the deductible exceeds $1,200 requirement. B. No, because the deductible is below the $1,600 minimum. C. No, because the deductible exceeds the $1,550 maximum. D. Yes, because the deductible falls between the IRS minimum and maximum. The correct answer is B. IRS rules require a minimum annual deductible of $1,600 for self-only coverage in a tax-qualified HDHP. A $1,400 deductible does not satisfy this minimum. Reason A is not correct. This option cites an incorrect minimum threshold that does not align with the current IRS rules. Reason C is not correct. There is no IRS maximum deductible of $1,550. Maximums apply to out-of-pocket limits, not deductibles. Reason D is not correct. This misleading statement overlooks that the deductible is actually below the IRS minimum. Question 12. Under the Medicare Supplement Plan, G standardized benefits, which of the following expenses is not covered by the policy? A. Medicare Part B deductible. B. Skilled nursing facility coinsurance. C. Medicare Part A hospital deductible. D. Emergency foreign travel deductible. The correct answer is A. Medicare Supplement Plan G covers all standardized Part A and Part B cost-sharing benefits except the Medicare Part B annual deductible, which remains the beneficiary's responsibility. Reason B is not correct. Skilled nursing facility coinsurance is a covered benefit under Plan G after Part A inpatient coverage is exhausted. Reason C is not correct. Standardized Plan G pays the Medicare Part A hospital deductible in full, so this option is covered. Reason D is not correct. Plan G includes coverage for emergency foreign travel expenses up to policy limits after the travel deductible is met. Question 13. Under Florida law, how long does the Medigap open enrollment period last following the effective date of Medicare Part B coverage? A. 3 months. B. 12 months. C. 9 months. D. 6 months. The correct answer is D. Florida guarantees a 6-month Medigap open enrollment period beginning on the effective date of Medicare Part B, during which insurers must offer policies without underwriting. Reason A is not correct. A 3-month period is shorter than the 6-month duration defined by Florida statute. Reason B is not correct. A 12-month period is longer than the statutory 6-month open enrollment timeframe. Reason C is not correct. A 9-month period exceeds the 6-month window guaranteed under Florida law. Question 14. Maria, age 55, plans to retire at 65 and is concerned benefits will lose purchasing power over 20 years of potential long-term care. She reviews these riders: a 2% simple inflation increase, a 3% compound inflation increase, a guaranteed purchase option to buy additional coverage in the future, and no inflation protection. Which rider best ensures the highest benefit increase by retirement? A. No inflation protection rider. B. 2% simple annual inflation increase. C. 3% compound annual inflation increase. D. Guaranteed purchase option for future coverage. The correct answer is C. This option is correct because compound inflation increases accrue interest on interest annually, yielding a significantly higher benefit growth over a 20-year period than simple or purchase options. Reason A is not correct. Without inflation protection, benefits remain level and lose real value over time. Reason B is not correct. Simple increases apply only to the original amount and do not compound earnings on prior increases. Reason D is not correct. Purchase options allow future increases but depend on underwriting and do not guarantee consistent benefit growth. Question 15. Mark, age 60, has sufficient savings to cover the first 90 days of care, and wants to minimize long-term care insurance premiums. During a cost-benefit review, the agent offers elimination periods of 30, 60, 90, or 180 days. Which elimination period should Mark choose to best meet his goals? A. 30-day elimination period. B. 60-day elimination period. C. 90-day elimination period. D. 180-day elimination period. The correct answer is C. This option is correct because setting the elimination period equal to the 90 days that Mark can self-insure maximizes premium savings without leaving an uninsured gap in coverage. Reason A is not correct. A 30-day period would increase premiums since little self-insurance is used. Reason B is not correct. A 60-day period underuses available savings and costs more in premiums. Reason D is not correct. A 180-day period exceeds what Mark can self-fund, leaving him uninsured beyond his comfort level. Question 16. After hip replacement surgery, David's long-term care policy provides a skilled nursing facility benefit that covers medically necessary services during rehabilitation. Under this benefit, which service would be covered during his SNF stay? A. Room and board charges for custodial care. B. Routine housekeeping and laundry services. C. Daily supervised physical therapy. D. Over-the-counter toiletry expenses. The correct answer is C. This option is correct because skilled nursing facility benefits cover medically necessary rehabilitative services, such as supervised physical therapy, rather than non-medical custodial or personal items. Reason A is not correct. Room and board for custodial care is a non-medical expense not covered under skilled benefits. Reason B is not correct. Housekeeping and laundry are administrative or support services, not skilled medical care. Reason D is not correct. Personal toiletry costs are incidental expenses and fall outside skilled care coverage. Question 17. Which of the following is a component of the entire contract clause in an individual health insurance policy? A. Copy of the original application submitted by the insured. B. Statements made in promotional materials outside of the policy. C. Audit reports of claims experience used by the insurer. D. Benefit summary documents provided to the enrollee. The correct answer is A. The entire contract clause specifies that the policy document, any attached endorsements or riders, and the original application constitute the complete contract. Promotional materials and benefit summaries are excluded. Reason B is not correct. Promotional materials created outside of the policy are not part of the contractual documents. Reason C is not correct. Audit reports analyze claims experience but are not included in the contract clause. Reason D is not correct. Benefit summaries are consumer disclosures rather than components of the contract itself. Question 18. Under the time limit on defenses provision, an insurer may rescind coverage for material misstatements in the application only if discovered within which time frame after the policy's effective date? A. 2 years. B. 6 months. C. 1 year. D. 30 days. The correct answer is A. The time limit on defenses, contestability clause, allows the insurer to void the policy for misstatements only if discovered within 2 years of the effective date. After that, the policy remains in force even for fraudulent misstatements. Reason B is not correct. A 6-month period does not align with the statutory contestability timeframe. Reason C is not correct. 1 year is a common elimination period, but not the rescission limit. Reason D is not correct. 30 days corresponds to the free look cancellation period, not contestability. Question 19. According to mandatory policy provisions, what are the standard grace periods for weekly, monthly, quarterly, and annual premium payment modes, respectively? A. 7 days, 10 days, 31 days, 31 days. B, 7 days, 31 days, 10 days, 31 days. C, 10 days, 7 days, 31 days, 31 days. D, 7 days, 10 days, 45 days, 31 days. The correct answer is A. The mandatory grace period provision specifies a 7-day grace for weekly premium schedules, 10 days for monthly schedules, and 31 days for all other modes, including quarterly and annual. Reason B is not correct. Monthly and quarterly grace periods are transposed in this sequence. Reason C is not correct. The first two modes are swapped, which does not match the provision. Reason D is not correct. A 45-day grace for quarterly premiums exceeds the standard allowance. Question 20. Felicia's disability income policy lapsed when she missed a premium payment. 3 months later, she submitted a reinstatement application, paid the overdue premium, and the policy was reinstated. 4 months after reinstatement, she files a claim for a knee injury. Under the contestability provisions for reinstated policies, which statement is correct? A. The insurer may investigate and rescind the policy if a material misrepresentation is discovered within 2 years after reinstatement. B. The insurer cannot contest any statements made in the reinstatement application once the policy is reinstated. C. Reason B is not correct. Underweighting domestic equity reduces total equity exposure rather than adding the specific style segment. D. The insurer may only contest statements in the reinstatement application during the first policy year following reinstatement. The correct answer is A. Upon reinstatement, statements made in the reinstatement application are contestable for 2 years from the reinstatement date, allowing the insurer to rescind if material misrepresentations are found during that period. Reason B is not correct. Statements in a reinstatement application remain contestable. They are not automatically free from investigation. Reason C is not correct. A 45-day period applies for proof of insurability requirements, not the contestability period. Reason D is not correct. The contestability period is 2 years, not limited to the first policy year after reinstatement. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.